Okay. Hi, I'm here with Dana Reed with Finance of America, who is going to share his expertise with us today. I
Good
know a lot
morning.
of you, good morning. I know a lot of you have been asking how this COVID-19 outbreak is going to affect the mortgage process. So interest rates, loans funding, all of that good stuff. And of course, none of us have a crystal ball, so we don't know exactly what's going to happen, but Dana can at least update us on what's happening right now. And one of the reasons that I love working with Dana, we've done quite a few deals together, is because in the past, obviously without coronavirus in the mix, the loans have always gone super smoothly. Anytime he pre-approves someone, they always end up closing, and I trust him explicitly. So thank you, Dana, for being here
Thank
and
you.
sharing your expertise, and hopefully we can be real with people and give them the truth without also being able to maybe calm their minds a little with some of the information out there. So
Okay.
let me go to my list of questions here. So I think first and foremost, and this is a question because I do have some buyers in contract right now. The ones that are going in contract today are a VA loan. And so interest rates are kind of a big deal because it can affect the monthly payment so much. So, and can affect sort of the spending power of a buyer. So how do you see, I mean, we all know interest rates have gone up a little over the past week or two, but how do you see that maybe balancing out? What do you think is going to happen with that?
Okay. It's actually more than a little. It's been a lot over the last 2 weeks. Um, we started 4 weeks ago, 5 weeks ago with extreme low interest rates, all because of the economy and the uncertainty, that type of thing. We now, as of last 2 weeks, have pretty much a 5-year high in interest rates
Okay.
at the moment. So it's been extremely volatile, up and down. We've had swings during the day of as much as 0.5% in interest rate, where it's flipped 3 or 4 times in one day, up and down, which is virtually unheard of. That just never happens. We have usually small incremental changes up
Sure.
and down, but it's been extreme. So tough to really project the market right now or
Yeah.
anticipate what it's going to be at. However, the Feds did announce that they're buying in the billions, probably at $30 to $40 billion a day
Hmm.
in mortgage-backed securities and treasury bonds.
Okay.
And mortgage-backed securities are really what we're based off of.
Right.
So if there's a lot being purchased of mortgage-backed securities, then interest rates do generally come down. So hopefully this week, and that's every day this week, they're doing that. So we'll just keep an eye on it, and hopefully they're going to come back to where they were, because we are extensively high right now, higher than
Right.
we've been. You're
Well,
looking.
higher than we've been, but in the grand scheme of things over the past 60 years,
Well, no,
we're
we're not
still
anywhere
doing pretty
near
good, right?
the interest rates in the 80s, and we're
Right.
not anywhere near the 6 and 7% we've been at
Right.
many times. But we are, in the high fours, even into 5% range at the moment.
Okay.
But I'm already seeing effect today of what the Feds are doing, and the market's been favorable, extremely favorable. So has it shown up in the rates yet? No, but
Right.
the mortgage-backed security market is down 158 basis points at the moment, which equates to about 0.5% in rate. So
Okay.
so it's looking better. So maybe we'll get back down to some lows and free up some money and make it a little easier for people to
Okay.
do it. Yes.
So with your clients that are in contract this week, would you recommend holding off on locking rates until we see how this infusion of federal money is going to affect those interest rates?
I would listen to your individual loan officer who should be coaching you.
Right.
And we watch it every day. I watch it on a hourly basis at this
Hmm.
moment. Normally I check it 2 or 3 times a day, but now it's probably every 30 minutes. We're
Okay.
checking the status of the mortgage-backed security market and what's going on. I do have advisors. I have professional advisors that I subscribe to that kind of give us an idea of what's going to take place in the market.
Okay.
And as good as they are, they've been a little baffled recently as well.
Sure.
We're in uncharted territory, so we're just
Right.
taking it, 1 hour at a time. I would suggest that we watch it carefully and listen to your loan officer as to when they think it's a good time to lock in. They're the professional. They should know.
Right.
I'm thinking maybe towards the end of this week might be a good time, just depending on how it plays out. We'll just have to see. And, like I said, we've seen the improvement today, but it hasn't really shown up on the rate sheet yet.
Right.
And there's a lot of factors with that. Part of that also right now is the artificial slowing down of the business.
Mm-hmm.
We took in so much business in not the last 2 weeks because the rates have been poor,
Right.
but the 4 weeks before that, the rates were so good that we took in an unprecedented amount of loan volume. And to give you an idea, in 2019, as an industry, we funded in the neighborhood of $6 trillion in loan volume.
Mm-hmm.
That's for all of 2019. Well, in a 30-day period, when these rates did what they did, as an industry, we brought in and locked in and originated $3 trillion in loan volume.
That's
and
crazy.
So half a year's worth in 30 days. So the easiest way to describe it is you have a snake that has swallowed a pig,
Mm-hmm.
and now we have to try and get that pig through the snake because
Right.
it's there. And now we have to digest it and get it through the system.
Okay.
And every facet's going to be slowed at this point.
So things being slowed down and backed up isn't only because of coronavirus. It's also compounding on the fact that you got this huge influx of business right before
Yes.
all of this happened. And so the combination of the two is really what's causing the slowdown, not
Yes.
just one or the other. Okay.
The coronavirus is not really, I don't see it having much effect on the slowdown in the business right now.
Okay.
That's more just because there's just so much volume that
Gotcha.
every ancillary product, whether it's an appraisal being done, whether it's title and escrow providing the preliminary title report,
Mm-hmm.
whatever it is, those are all backed up.
Okay.
Because we had such an influx of business in. So it's taken 2 and 3 weeks to get appraisals back.
Right.
It's, we were sitting in line in underwriting for, maybe 2 or 3 weeks before the file even gets looked at. So every facet of the system is backed up.
So is a 30-day escrow feasible with a traditional loan process?
Not for a refinance.
Okay.
Now, for us, purchases have always been our priority
Right.
and our mainstay. So we're still at 30 days to close a
Cool.
purchase with our system.
Right.
However, we're still at the mercy of appraisals,
Yep.
title and escrow,
Mm-hmm.
things are out of our control. If it takes 2 weeks to get that appraisal back, then that's beyond our control. But we still put the file together, get it to underwriting, have it approved subject to an appraisal, so that the minute that appraisal does come in, we can go right to get our clear to close and go to docs.
Okay, perfect. So at this point in time, because one of the questions I've gotten from somebody is not so much a fear of the process or the interest rates or the slowdown of that process, but that maybe depending on what happens over the next 30 days, banks are going to stop funding loans. Do you see that happening? I know you don't know the future.
I don't.
But I mean, based on what the government is doing to try and keep this going, I feel pretty confident that we're going to be okay. But people, of course, are just worried. What if the banks start to get scared about home prices dropping and don't want to fund loans?
Though we don't feel that that's going to happen.
Right.
We're not anticipating that. But however, risky loans, in this, what we call B paper or subprime loans, non-QM is the phrase now. With with the qualified mortgages, QM mortgages, we're not anticipating a problem. With the non-QM product, which is any type of hard money, subprime, and I do a fair amount of those generally. They're bank statement loans,
Right.
Where a self-employed borrower is qualifying based on bank statements rather than
Pay
tax
stubs.
returns,
Or-
because
yeah, okay.
they're showing small net profit. And those loans I have seen a slowdown with, and actually
Okay.
some of those companies have sent out emails saying at this time they're not funding loans and they're putting a halt on everything. And that's because where they sell those loans, there's not a market for it right now.
Right.
So the investors that were going to buy that type of paper, are not buying that type of paper. It's too risky, because that's, if we did have another 2008 and went into that type of situation, those were the type of loans that had the worst
Right.
performance, and people had all these loans on the books that they couldn't sell, so they're not going to get back in that position again.
Okay, which is good news,
Can't
actually.
compare this to 2008
No.
because the home values are not dropping. Trust me,
Right.
they're not going to drop.
No, I know.
Low,
We're going into
they're not
contract
dropping.
on we had to go 15,000 up the listing
Yeah.
price still.
Yeah, they're not. Supply and demand is going to determine home values.
Right.
And as of this time, the supply is not holding up for the demand.
Right.
So you're just not going to see values dropping unless there's a demand dropping.
Yeah. Right. That makes perfect sense. Okay, those are my primary questions. Is there anything you want to add to people who might be thinking about talking to a lender and just aren't sure if now is a good time to have that conversation? What would your advice be?
A couple of things. One is what I'm suggesting to my clients, because I have a large client database, and a lot of my clients are reaching out to me about refinancing and what to do. And so right now I'm saying, let's just hold off. Send me your documentation. Send me. Basically, what I'm doing is, if you play golf, I'm teeing it up, ready to drive the ball, but we're not going to hit the ball until it's ready to go. Okay. So I probably have right now 25 clients that I've got their paperwork. We've got the copy of their mortgage statement. We've kind of semi-worked it up. We know where they need to be at, excuse me, to be able to move forward, rate-wise.
Right.
And if it gets to that, we'll lock it in and get them started.
Okay.
The other thing is just, so kind of be ready to go, and then have patience, because once you do, once we start the process, it's not going to be a fast process.
Right.
It's going to take 60 days minimum to close that loan. We're locking our rates for 60 days at this point. So your rate's going to be protected. We just have to kind of get it through the system.
Right. And for someone who has a need to buy, because what I'm seeing is obviously the people who don't have a need are kind of holding back and saying, okay, let's see what happens. But on the flip side, there are a lot of people, like my clients today, they're moving here for a job, and his job is still happening. So they still have to move here and they still want to purchase a home.
Right.
Lots of sellers who, have a need for that bigger house or the smaller house or whatever. So we're still seeing activity in the market for those people that need to buy or sell. So for them, would you kind of recommend the same thing? Just get the paperwork in, get started on the process, and then
definitely
this week or next week or something, rates start to fall, then we can,
right. No, go ahead, find the home, get in contract, start the process. You just don't lock in the rate until it's good, because it's going to be 30 days, before you're going to close anyway.
Right.
So just float for now. And when your loan officer says, hey, this is the time, lock it in, then just go with it. Be ready to act quickly on it when the time comes.
Okay. Yeah, that makes sense. Cool. Well, thank you so much. I think
you're welcome.
Even though this isn't all good news, I think it's going to help people to understand what's happening in the market and what is maybe coming up in the next couple of weeks. And I know for me, it helped me because I haven't really known how to answer some of these questions when my clients are asking me. So thank you
You're
for
welcome.
sharing your knowledge with me and with everyone else.
Sure.
And I'll do my best to figure out how to tag you on this recording once I post it everywhere. And thanks again. This was awesome.
All right.
All right.
Hang in there.
Bye.
Okay. Bye.